Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, it was a weak day of trade today on the Lal Street. We saw a 200-point cut on the Nifty. In fact, it has not just slumped below that 24,200 mark, but it's even slipped below that 24,150 mark. It was a 700-point cut on the Sensex as well. Broader end of the markets also succumbed to selling pressure. Remember, a couple of sessions prior to today's session, we saw some strength coming in on in the broader end of the markets, but that has fizzled out today with the advance decline ratio on the NSE at 1:3. 590 shares advancing to 1800 shares declining. So the breadth was extremely poor. And if you look at the sectoral movers, most of the sectors, in fact, all of the sectors were in the red. But banks, they took a tumble thanks to HDFC Bank. Before we talk about other movers, Yatin, and all the other sectors that were in the red, let's talk about the banking pack. It was the Nifty Financial Services expiry, weekly expiry today. That index slumped 2%.
Correct.
Banking index below 50,000. And of course, the biggest culprit was HDFC Bank, and that
Absolutely.
was also the top contributor to the Nifty's fall today.
Yes.
Yatin, trigger.
So, nearly half of Nifty losses came in from HDFC Bank, and the most important part here is the disappointment in the MSCI index inclusion. Now we know that the FI headroom was met by HDFC Bank as per the latest shareholding, and the expectation of the market was that if MSCI was to fully take cognizance of this particular information, then there could be a potential weight increase that would lead to a $3.5 billion kind of a buying, which means that the market expected buying in excess of 25,000 crores. MSCI in the today's circular for the MSCI changes announced that the weightage increase will be done in two phases. Number one is the August review, which the change happens on 30th of August, where the buying would be only $1.8 billion, and subject to a 20% headroom, the changes will happen in the November review. So essentially, this was a division of buying which the market expected to happen in August itself, which got pushed to November in terms of timeline. And instead of $3.5 billion, we have only $1.8 billion of buying, because of which a lot of these arbitrage funds, hedge funds, unwound their positions in the F&O market for HDFC Bank, and hence the kind of decline that we saw in the stock today by nearly 3.5%.
That's correct, Yatin. Two tranches, and the street was not really ready for that. They were hoping for the weight increase to happen at one go, and which is why we saw such a sharp reaction coming in on shares of HDFC Bank. But aside of banks, what didn't do well was the entire metal basket. That was among the top drags. But there were pockets of outperformance that too came from the usual, defensive pack, right? Pharma, FMCG. Some of the IT names also saw some buying. So, just want to point out some of the names that stood out in today's session. Tata Group owned Titan. That was the top Nifty gainer. Apollo Hospitals ahead of numbers. That stock was doing well. Dr. Reddy's, Tata Consumer, Nestle, and some of the IT names like Wipro also saw buying interest. In terms of laggards, of course, HDFC Bank was among the big laggards, but BPCL was the other one, tumbled somewhere around 3%. And you have crude prices to blame for that. Entire OMC basket was in the red. Crude prices have topped that $82 per barrel mark on the Brent, and because of which we saw weakness coming in on the entire OMC basket. Aside of that, Shriram Finance, HDFC Life, Tata Motors, these are some of the numbers, or some of the stocks rather, that were on the losing end. But Yatin, broader end of the markets, there were quite a few result reactions, because this is the last leg of earnings, right? But Aarti Industries, I think that was the top one.
Absolutely.
But aside of that, you had Triveni Turbine that provided some support as well.
So the market advance decline ratio was quite weak. In fact, it was almost 1:3, 1:4 at one point in time. Now, if you look at the gainers, we have Triveni Turbine as well as Triveni Engineering. Both of these stocks moving in trade. 5% gains for Triveni Engineering and Triveni Turbine moving 12%. Keynes Technologies, after a good set of numbers, along with Olectra, moved nearly 7-8% in trade. Losing side, obviously, Aarti post the guidance cut. We have 15% downtick in that stock. Zydus Life, Deepak Fertilizer, Chambal Fertilizer, all of these stocks down anywhere between 6 to 7%. In fact, Zydus was one of the MSCI inclusion candidates which got included, but probably some profit taking in that particular pharma name.
That's correct. Then those were the mid-cap movers and shakers in trade today. But on that note, let's take a look at the stocks that are on our radar this afternoon. I want to start with the Honasa Consumer, Yatin. Today, it was among the outperforming stocks in a weak market, gained somewhere around 3% or thereabouts. Yesterday, remember, the stock was not doing well. Numbers came out, and numbers were pretty decent, but the company is, making some adjustments to its inventory. because of which it expects some bit of weakness or potential hit of 150 to 200 basis points going forward in the coming quarters, which is why the stock lost yesterday. But today we have a Goldman Sachs report. They have initiated coverage on the stock with a buy rating, target price of somewhere around 570 rupees or thereabouts. The stock itself is quoting at 465 at the current juncture. Now, Goldman Sachs has listed a few triggers or a few factors behind its coverage initiation on the stock. It says that the company is best positioned to take advantage of the rising e-commerce share as well as science-based skincare products. The company, of course, has various brands like Mamaearth, Aqualogica, the Derma company, etc. So a lot of these science-based skincare products, these are some of the up and coming skincare products, and the company is well poised to take advantage of this wave. And there's ample opportunity for the company for market share gains as well as margin expansion going forward. Two major levers that has been pointed out by Goldman Sachs. First lever to fuel a 2.5 times revenue growth over FY24 to FY30 is the scaling up of the brands like the Derma company as well as Aqualogica brands. Now these can be replicated, to achieve success like Mamaearth has achieved. The second lever is to double the offline distribution to 4 lakh retail outlets by FY27. EBITDA margin estimate for FY24, FY27 and FY30 are at 7.1%, 10.2% and 14% according to Goldman Sachs. Now, Honasa also, has came out with its numbers recently, right? So they have pointed out that they are confident of attaining a 20% revenue growth despite the inventory-led blips that the company is looking at. And it has said that there could be a potential hit of 150 basis points to 200 basis points due to this inventory correction. But even brokerages believe that this blip or this decision to clear excess inventory in trade will hurt its performance in the second quarter, but third quarter onwards there will be recovery. If you look at the stock, it has gained somewhere around 9% in the last 1 month, 3 months rather, and in the last 1 month it has given negative returns. But if you look at some of the other research agencies like Nielsen, they have maintained very positive commentary on a company like Honasa. They say that Mamaearth is one of the fastest growing brands in face wash and shampoo in the offline channel, and it's the 4th largest face wash brand in modern trade. So all in all, brokerages and even research agencies are pretty upbeat on where Mamaearth and Honasa as on the whole is headed. So yeah, looks like there could be some blips in the coming 1 or 2 quarters, but post that the growth trajectory remains intact.
So interesting report on Honasa, but what did not impress the market today was the stock of Aarti Industries. Results were okay, but the management did not give a proper guidance layout for FY25. In fact, the competition from Chinese products as well as the overall macro headwinds in Europe and US have forced the company to probably curtail their overall guidance. Now today we have Morgan Stanley, which has come out with an equal weight rating on the stock with a target of 615, and they say that despite the fact that there were some green shoot in the agrochemical space, the company probably has some issues with respect to the growth trajectory in the shorter term. In fact, despite having a confident outlook of delivering a 20-30% volume growth, the company has curtailed the EBITDA guidance range of 1450 to 1700 crores, which will get revisited in the next quarter, because probably the kind of headwinds one is looking at due to Chinese competition is something which will keep the guidance at bay. Probably there are chances, or probably the market is sensing that the guidance will be further revised downwards because the headwinds still persist for the chemical industry. In fact, after the commentary of Aarti Industries, not only the stock of Aarti Industries fell 15% in trade, but also other chemical stocks like Deepak Nitrite, we had the likes of Vinati Organics, and other companies saw 4 to 5% cut. So entire chemical pack was probably nervous after the kind of competition which is seen rising from the Chinese counterparts, as well as the global sluggish demand has seen a muted outlook for the near term.
Well, that was Aarti Industries. The stock was down 15% as the management, of course, looks to revise guidance and, of course, also flagged off concerns over China competition as well. But the other stock that was in focus today was Bata India. Of course, the stock has the most sell ratings since 2021. Latest one to downgrade the stock is Goldman Sachs. They have downgraded it to sell from neutral. It has cut the target price to 1300 from 1470 rupees, which implies a downside of 9% if you compare it to yesterday's close price. Now, Goldman Sachs has cut the FY25, FY26 and FY27 EPS estimates by 17%, 12% and 12% respectively. They don't see any catalyst for growth for Bata for recovery in the same store sales growth to mid or high single digits even. In fact, the same store sales growth for Bata has been negative to flattish over the last few quarters. EBITDA margin, according to Goldman Sachs, is unlikely to reach even the levels of FY20, even by FY27. They are saying that even the level that the company saw in FY20, they can't attain that even by FY27. Now, Bata had reported EBITDA margin of 28% in FY20. It had closed FY24 with margins of somewhere around 23%. But now for the first quarter, the margins have fallen below 20% and come in at 19.6% vis-a-vis 25% last year, Yatin. Revenue also declined by almost 1.5%. Profitability was there, but it was aided by an exceptional gain. Now, if 10 out of 22 analysts that are covering the stock have a sell rating on the stock, I think only 4 of them have a buy rating. And if you look at the shares, they are trading at 1 year forward PE of 42.9 times, which is in line with the 5-year average. But given the kind of growth outlook that the industry is really penciling in,
Correct.
The fact that it cannot, go back to the pre-COVID margin level even by FY27 paints a rather bleak picture for Bata.
Yeah.
Looks like it ain't either sprinting towards or tiptoeing towards good margin growth trajectory. And if you look at the stock performance, in the last, on a year-to-date basis, the stock has lost almost 14%. Yatin.
Absolutely, and the stock of Bata nearly at the day's low, 1% cut coming in for that particular stock.
Well, I think with that, we've covered all the stocks that were on our radar this afternoon. Of course, we'll be keeping a watch on all the companies that will be reporting numbers post-market hours, including the likes of Hero MotoCorp, as well as Hindalco and Apollo Hospitals. We'll take stock of them tomorrow morning, Wednesday, 9 a.m. on opening bell with me. So don't forget to tune in. Of course, tomorrow is pseudo Friday, I think, because 15th is a market holiday. So but then I'll see you tomorrow at 9 a.m. Thanks a lot for tuning in, and stay tuned to Money Control for all your other news and updates.